Well, let's shift focus to PI Industries. The company's year-on-year growth has slowed down a bit. Pharma and agrochemicals were under pressure, but the company managed to improve operating profit margins on a year-on-year basis. Let's talk about what the future looks like. Mayank Singhal is Vice Chairman and Managing Director at the company. He's joining us now to take some questions. Mr. Singhal, good morning. Great to have you with us here on the program. Thank you for joining us. Prashant this side. So, sir, you've, on an overall FY25 basis, revised your revenue growth guidance to 15% from earlier 18 to 20%. Could you start here? Which segments is this slowdown in the rate of growth coming from, and just sort of put some qualitative aspects to this number?
Yeah, morning. Good morning. Once again, I think let me give you a quick background about the industry itself. I'm sure all of you are aware that, there have been very strong headwinds for the agrochemical industry globally. And there has been a negative growth all across the sector globally. Given that fact, I think PI has still performed well. We've still shown double-digit growth, very closer to line to what our plans were. But I do believe this hangover is going to continue in the global markets for the next year. Looking at that, we have given an estimated about a 15% growth. On the other hand, the company has primarily focused itself on becoming more efficient from a working capital standpoint of view, looking at product mix, and the domestic business has focused on value creation and looking at how we can bring about efficiencies in the process systems while these headwind challenges are. On the other hand, we have contracts which are in place, which are to be executed. A bunch of 7 to 8 new products are coming in both the businesses. And on the other front, we have also recently invested in building the platform areas of Pharma, which will have its own colors playing up in the next 3 to 4 years.
Mr. Singhal, in terms of the broader, what you said, right, the backdrop, which has affected your growth guidance as well, when is a turn expected for agrochemicals? And what will signal that, in your opinion? Yeah.
Yeah, so I would say that, looking at what's happened over the last year and a half is that was overstock, as all of you are well aware. I think the destocking piece is now coming to, hopefully, in a quarter or two, into control. On the other hand, the seasonal impacts have also been there. Given that if the first season globally goes well and the seasons play up well, I believe this is not more than a year plus of hangover.
Okay, so is there a possibility, Mayank, hi, good morning, this is Sonia here, just to complete this loop, you've scaled down your outlook to 15% in FY25. Is there a possibility that you may not even meet that 15% given how, concerned you are about the global situation?
Well, as I said, the global scenario is improving, number one. On the other hand, as you would know, that we have from what we know, that the best of our estimates, we have pretty well contracted revenues, and we're expecting to definitely see certain growth coming in the domestic business if seasons are favorable. So I think we could well hold on to that number for now.
Okay. And the CSM revenues over there, they de-grew almost 7% if you compare it on a quarter-on-quarter basis because of the decline in volumes. What's the outlook for FY25?
Well, as I said, we've given the same estimates of growth around 15% odd. I think, again, this business, as I mentioned earlier, is not a quarter-to-quarter. It depends on supplies and situations. It's in certain quarters and product mix which defines the volume growth.
All right. Hi, Mayank. Good morning and good to see you in. So 15% is the overall growth. Now, if you could break it up for us category-wise. CSM, Pharma and the domestic business. Pharma, last year you did around 320 crores odd. CSM was closer to around 6,000 crores. So if you could break it up for us, what could the difference be?
Well, I would not have the exact breakup here right now, but I can say that primary growth is going to come from the AgChem space. Pharma is still in the nascent stages. Obviously, we'll see a certain amount of growth there. As you know, that we've been investing to build a unique, differentiated capability here. Yeah. And that is obviously going to take its time. And in the PI way, we always take our time to put our right strategy before we see the numbers play out.
Okay, all right. What about margins? They're holding around this 26.5% odd. Given the industry headwinds, do you believe that you can sustain it around these levels?
Yes, we believe, and I think we've given that outlook. We should be able to sustain around that level. Yes.
Okay. What's the pipeline looking like now? You have 6 new products that were commercialized in FY24. What is the product pipeline in FY25 and 26? What can we look forward to?
I think we mentioned that we are looking about 3 to 4 or 5 products in the distribution locally. We're looking at 6 to 7 products in the manufacturing piece of the custom manufacturing export, where we are looking at commercializing some of those products for now.
You're also foraying into developing certain chemicals and advanced polymers for semiconductor applications, right? In the non-agri-chem pipeline. What is the potential that you're looking at over there? Because that's a big space now.
Well, it's a big space, and it's highly technically challenging and a complex space in terms of what needs to be done, how it needs to be done. So we're happy to say that over the last decade, we've been actually wanting to play in this space. Today, we're going into commercialization of a certain amount of products which have certain unique technological and quality management capabilities. I definitely see this playing an important role in looking at the potential of this and India's outlook in the semiconductor and electronic space, this space to be a great potential. And having laid our partnerships and footprints in that, I think we should be in the forefront to look at the technological parts of this play.
Got it. Mr. Singhal, just to take you back to what you started by saying, you said a turn is perhaps not more than a year away, right? In terms of all these overstocking issues, etc., to be behind. So in a year like that, with all of this, you're guiding for a 15% growth. What would a turn and then kind of, a regular kind of market mean for prospects? Would you get to the 20-25% kind of range? Once that happens,
I think we need to balance our thought processes here. Today, PI's base has become big. We have to look at the industry numbers, and we have to be somewhere aligning, playing at the scales that we are today. So obviously, that is something, as you know, today, the weather and the climatical situation play an important role in this sector. And I think what one would wait and watch as to how things have turned up. But the PI strategy has always been to look at how we can actually isolate and manage this challenge. And so far, we've been tidying well, specifically given if you look at the present year, where it has been a very strong negative growth, and PI still delivered a pretty strong set of numbers here.
Okay, all right. Mayank, final couple of questions before we let you go. In the pharma business, you were indicating that maybe there could be some more inorganic growth. Are you all on the prowl in the pharma sector? And also, where do you see that number headed in the pharma business itself? Because you were looking for an asset for a while, you've got in there. You're doing around 300 crores or say in the next 3-4 years, where do you see this business headed?
Yeah, I hope to be at least easily, if not triple that number, double or triple that number in 3 to 4 years. And obviously, as you know, the CRDMO space is not about chasing the number, it's about chasing the right play and building the right capability. And just to take you a little back, I think when we built the PICSM business, and some of you may not be not aware, but it took me about 10 years before we could really play the game up. So 98 to 2008, we were investing, building unique capabilities before we really saw the numbers play in henceforth. So I think that's what we're targeting there. And I think not driving by numbers, but yes, numbers will come through. But it's more about building the capability in the platform to really be able to connect with the customer.
So if it has to triple the revenues from here, it's including some more inorganic growth?
That's not on the. I don't see that as we have enough right now to do. That's something we will see as and when if something interesting comes our way. As
so 1,000 crores from pharma in the next 4 years looks doable.
Yes.
Okay, that 1,000 crores from pharma in the next 4 years. You earlier guided for the fact that new products will be at least 30 to 35% of your total revenues in the next 3 years. Any change to that? And what kind of contribution do you see from new products in the next couple of years?
Well, I don't have the contributions here, but yes, we guided about 30 to 35% from new products because constantly new products are coming and they're all getting scaled up.
Okay.
All right.
Sorry. For the big product, Mrs. Singhal, we, pyroxasulfane, as it becomes generic over a period of time, could you talk to us about what's happening there? That's your largest product.
Yeah, well, that has been discussed. I think as it gets generic, PI is a manufacturing part of the value chain, as you would understand. And typically in a generic, it is a marketing side, and the innovator is the guy who decides the strategy there. But we are a contract manufacturer, which is based on a certain understanding, and I see that ability to combinedly handle the generic. I don't see that as a challenge with the kind of understanding technological capability that we put together.
So in terms of price erosion for the product, could you give us sort of a glide path? What would it look like into the future? You'd have a good sense.
Well, that would not be for me to comment. As you know, I'm a contract manufacturer. It is more of the innovator who has that perception, right? So it holds there.
Okay, so just a final question before we end. This non-agro space, right, which is growing very well, whether it's electronics, semiconductors, performance chemicals, advanced polymers, where are you seeing the maximum potential for growth over the next, say, 3 to 5 years?
No, as we said, we're looking at these advanced polymers and we are looking at the electronic chemicals. And that's where we are focusing as an organization.
Okay.
And pyroxasulfone, you have already told us, is something quite optimistic. It continues to grow in double digits for the next 3-4 years. Do you have visibility on that front?
Well, I can't disclose that given the competitive intelligence and from our confidentially understanding with our customers. I hope you appreciate that.
Okay, Mayank, appreciate you joining in and detailing those numbers. So 15% revenue growth, margins holding at around this 26% odd. The pharma business could possibly triple its revenues in the next 4 years or so.